Hard money and private money fall under this private lending umbrella, this private credit explosion that occurred after the financial crisis over the last 15 years. It's important to know as an investor the differences between hard money and private money and how one can transact very differently than the other. And it's not just about rates. It can be about structure. It can be about access to capital. It can be about a lot of things. And this video is going to get into it all. Most new investors use private money and hard money in the same context, and they're really, really different. And it's important to know the distinctions between the two, right? Private money, it's usually a smaller bucket of capital. It's really private. It's a local investor who is taking their money. Maybe they even get a line of credit from a bank, but they have a little bit of money, a couple $1 million, $5 million, and they're going out and they're making loans. And they're making loans in their backyard where they know the market really well. They may know you as an investor way better than someone like myself, who is more of an institutionally backed hard money lender who has access to cheaper rates, but doesn't have the ability to know the ins and the outs of the market, to take a deeper dive into you and maybe your reputation in the marketplace and all of that. So there can be mismatched expectations when you're talking to a hard money lender who has cheaper rates but boxes to check, where the closing may take 2 weeks, but with a private money lender, maybe that private money lender doesn't require credit to be pulled. Maybe the private money lender doesn't require an appraisal. Maybe they can close in 4 days because they just simply have a back office of one person that can just focus solely on that loan and get it done. The differences oftentimes, though, are the cost of capital. And that can be a real game changer for investors, right? Because while private money can offer flexibility and speed that's unmatched, no doubt about it, they can also offer leverage that is unmatched. And I'll have borrowers come to me after borrowing from private money who get 100% financing from their private lender, who might be their uncle who's a real estate agent / investor who has no problem taking the property back in foreclosure. Very different dynamics when it comes to professional lender looking to make a loan and get repaid, and investor who doesn't need to necessarily get repaid by the borrower, but in fact can force a sale or take the property back and otherwise own it and be just as happy. So the profile between private money lenders in terms of their flexibility, in terms of their leverage level, speed to close, can be offset a lot of the times by the rate that you're going to be charged as an investor, because private money is oftentimes deciding whether they make an investment in a piece of real estate or they make a loan. So what is hard money? And I'm going to define it as institutionally backed private lenders. Basically, it's the lenders who are able to go to the banks, to go to Wall Street, to access capital that, the street lenders, the private money lenders, the local lenders just don't have access to. And what that means is more boxes to check. That means it comes with the systems and procedures that follow. What it means is a streamlined lending experience to the banks. Banks will take a month to 2 months to close on a bridge loan. We're going to take 2 weeks on average, and we're going to take a day or two to approve it, with a lot less, let's call it, conditions than a bank. And we're going to do just everything faster. We're in the speed of money business, but we're providing hopefully that balance between cost of capital for the investor and speed. The one thing to be careful about with private money is that oftentimes these lenders are investors. They could be, in fact, competing in the marketplace with you in hopes of buying or investing in their next property. So you got to know who you're dealing with. You're not able to vet these private money lenders like you can a hard money lender. You can't go online necessarily and find reviews. You're going to have to do your due diligence through word of mouth, find out from other borrowers what their process has been like. And a lot of the times these lenders are making 3 to 4 loans and they don't really have a big borrower base. So you're really going into a situation, making a leap of faith that they'll execute up front through the loan term and then ultimately be flexible with you if something were to happen. And by that, I mean, you have to understand that private money lenders are more flexible. They're more nimble. They don't have a problem necessarily with taking back the collateral if the borrower has trouble refinancing or selling the property. So they will exercise their rights to foreclose per the loan documents, in my opinion, much faster, because they're looking at the collateral as their primary source of repayment like we are. But being so locally tuned in and understanding the market dynamics and everything, maybe they have more of an appetite to own real estate than we do, because we just want to get repaid and make another loan. It takes a lot of time and a lot of effort to foreclose, and institutional, private lenders, hard money lenders like myself would much rather extend, would much rather give you more time to complete the deal and successfully exit through refi or sale than a private money lender would. And in that same instance, oftentimes that private money lender, if they do give you relief, are going to charge you an arm and a leg for that, whether it be extension fees, additional terms, or whatever. Maybe they charge default interest and the default interest rate is 18%. All of these things need to be considered when you're inquiring about a loan from a private money lender. One of the most difficult things is finding a private money lender, never mind building up trust with that lender, because at the end of the day, these aren't folks that are advertising and putting up a website or what have you. Usually that you find these folks through word of mouth, maybe through an investor community or what have you. So if you're lucky enough to know a private lender who's actively lending and has the money to actively lend, then to me, it's going to come down to speed and flexibility. You're going to go to a private money lender because you might need to close in a few days. Hard money lenders can, but oftentimes it's going to be about 2 weeks to close a hard money loan. Private money lenders can close without an appraisal. They can close with a low credit score. They can close with a lot of things that a hard money lender might require. And at the end of the day, that might be enough just to get your deal done. You go to a private money lender just to close, no questions asked, 3 days. And you're willing to make the trade-off for higher rates and all of that other stuff. The other thing could be local flexibility you need. You have a situation where you're buying a house and you want to do an addition or put an ADU, or there's a lot beside it that needs to go through permitting. A local private money lender might look at it, understand the real estate, understand the market way better than we can, and take that risk and close, versus a national lender like us who has to put you more in a box, and if it's not by right, we can't close. So little flexibility, nuances with the deal. It could be credit, it could be speed. Private money is the way to go. If you're looking for a predictable process, if you're looking to review online reputations of lenders and how they've performed, if you're looking for a lender that has money to lend and grow with you and to allow you to scale, that's oftentimes what you'll find when investors decide they're going to make the jump from private money to hard money. They're looking for, more programmatic lending options. They're looking to improve their business or grow their business to a point where it becomes more efficient, and they can to grow with a lender that's more predictable, that offers cheaper cost of capital, that matches where they're going, but doesn't bog them down like a bank would. So it's that critical balance, as I'll say, that hard money strikes between being flexible like a private money lender, but with more of the, call it bank-like rates or cost of capital or cost of borrowing than what you're going to experience on the private money side, which we know can come with very expensive rates and points. Hard money and private money solve different problems. The best investors I know will use both from time to time strategically, because it's not about interest rate all the time. It's about the most efficient, the cleanest execution possible for that particular property. And oftentimes it can come down to speed versus rate. And we'll talk a lot about that on my channel, as you know. My name is Mike Chadwick. I really appreciate you watching the video. If you have any questions about private money or hard money, please don't hesitate to leave a comment. And I appreciate the likes and, of course, the subscribes. It goes a long way towards promoting my channel and growing my audience. So thanks for watching, and I look forward to the next one.